Okay, so bit of a disclaimer. You guys can't see this, but okay. Now I'm guess we're going to try and do this. I've got Pete next to me, one of my star traders. Yeah, he's smiling at me, but I'm going to make this a little bit more interactive and a little bit more casual, I guess. You know, it doesn't have to be. It's not formal. So, if you want to talk to me, feel free to stop, open up your mic, and ask me questions. Grog, especially you, mate. I need you to give me your input. And we're going to talk about. I guess with the first one we'll do is the Lorentz regression, which is a pretty good tool that I think everybody should use, especially on the DAX. It works pretty well on the 5-minute chart. Also, we'll talk about the news strategy. Yep. How that's been working, how often it goes off, those type of things. Guys, just give me 1 second, all right? Put a pause. All right, sorry about that, guys. Okay, so Lorentz regression is the one. Then we're going to do some news strategy because we had a really good, nice pop off on the news the other day. That was what, NFP, wasn't it?
Yeah.
You remember that?
Yeah.
Yeah, remember a little crack over Discord on that one.
I do. Yeah.
Yeah. Okay, so and what to do when? I think what we can do is we can trade the news strategy, even if it does fall inside the zero point 0.5 standard deviation envelope. What we can do is we can still trade it. Okay, and I'll go over that again. I mean, I've gone through it, and I'm assuming everybody here has done the entire course. Okay, so I'm not going to redo what news strategy is because it's already on the videos. Yeah, and I'm not going to do what Lorentz regression is because it's already on the videos. Right? I don't need to redo it. Okay, because I'm just repeating myself. That's why I've got videos. Yeah. So I'm assuming we're already on the same page, and if we're not, speak up now. So, and if you're not quite sure, please do stop me. Don't be scared to say something. Yeah, mate.
I haven't done the that patch yet.
Okay. Well, follow along as well as you can. But I will go over it. But it's pretty simple what it is. But it's just it's an assistant tool. Anyway, I'll go over it. But just try and follow along because this training is more of like it's an add-on rather than me doing it from scratch. Okay, but we'll talk about it. Okay. Couple of things that a lot of guys are coming to me at the moment about our ABCDE count, which is probably pretty important. I'll go over what double tops, double bottoms. I'll do some rules around that because everybody kind of forgets the rules. And double tops, double bottom. And I'm not going to be wishy-washy today, right? I'm going to be fucking straight, direct at you. Okay, double tops, double bottoms, head and shoulders are probably the most simple patterns that there are. Okay, and if you don't know these rules, right, you got to know them. But what I'll do is I'll go over these rules so that there's no ambiguity. Okay, and what my interpretation of them are. Okay, but anyway, okay. What else were we going to do here? It's all up in here. Announcements. News cover strategy, trend assist, behavior and psychology. I guess that will just come out naturally. Okay. ABCDE count, double top, double bottom, cycle theory. We can do cycle theory again. And Elliott wave. Elliott wave's probably where a lot of people struggle because it's subjective. Yeah. But if you see it, it's like I say to everybody, right? If it's sitting there and it's obvious that it's there, then a lot of other people will see it. Okay, and that's all we're trying to do is trying to see what other people are trying to see. Okay, if we've got a impulsive wave all the way to the top, and then we get a double top or a head and shoulders on the ABC corrective move, right? Then other people are seeing it. Okay, so you've got the Elliott wave, then you've got a head and shoulders or a double top or something like that, or you've got an ending diagonal. Everyone can see it. There's more strategies that are all converging at the same time, and I guess this is the whole point of the entire training is convergence, right? But the idea of what we're trying to do is the popularity game, isn't it? Yep. Okay, and seeing whether which side can we make a decision based on popularity. Yep. And unfortunately, we all have to know all of the rules of all of the possible strategies that possibly are out there, right? And once you know those rules, and once you know how all of that works, then we can see what the double top players are playing. We can see what the Elliott wave guys are doing. We can see what the Fibonacci dudes are doing. We can see what the moving average guys and channel guys are doing, and whatnot, right? So, if we can see all of that, then we'll have an idea of where is our exit going to be. Is there going to be profit taking? Is there going to be a reversal or whatever it may be? Okay. And here, let me just show you this, right? Okay, everyone can see my screen. And I had this conversation with a trader yesterday, actually. If we've got an Elliott wave, 1, 2, 3, usually the longest, but never the shortest. 4, 5, okay? There's our impulsive Elliott wave to the upside. And then we've got a corrective move, A, B, C. Yep. Okay. Then we have some level of, I'll do it as just a line, okay? Just pretend this is a curve. That's the 200 period moving average. Yep. So we've got ABC corrective. Yep. We've got a first touch 200 period moving average. And then we've also got Fibonacci playing in here. And this is coming to the 382. Okay. C point on 382, first touch 200 period moving average. Buy the shit out of it. Yeah. Right? Yep. You saw that.
It's also probably D point if that's an ABCD as well.
That's a D, yeah, on the other side, okay? So that there is an AB equals CD, okay? Yeah. So there's profit taking. Here's a head and shoulders potentially, okay? So if we want to get like really specific and like make it look perfect, which never happens, right? We've got AB equals CD, and then we've got a head and head and shoulders in there, and there's in here somewhere. This is all buying, profit taking, which means that everybody's buying back from their sell positions, and we've got Fibonacci in the 200 supporting a case. You got to know all of these components.
Yeah, because if you're just playing the head and shoulders, you could be waiting for that head and shoulders to go to the 1618 like an idiot.
Correct.
You'll never get there.
Correct, because you haven't seen the rest.
Yeah.
Yes? Okay, does everybody agree with me on that one? Guess so. Grogs?
Yeah, mate.
Yep. Okay. Thanks for your input there, mate. All right, so it's simply this, but and this is the thing, new traders are just completely unaware of this, right?
It's hard to be aware of all the things in real time.
Unfortunately, though, but you have to be.
Yeah.
Right? You've got to be aware of all of these things, right? And it can be overwhelming for new traders to come in and try and remember all of this stuff, right? But I guess this is why, I'm here and we do this every day, so that you run the syntax of all of the strategies through your head at the same time, right? Okay, alrighty. So that's that. Let's talk about double tops, double bottoms, head and shoulders. Let's get them out of the way straight away. All right. Okay. My interpretation. Let's go over here.
Your interpretation of equal lows and equal highs.
Well, that's a good one. Yes, I mean that came up in what we were talking about the other day, right?
Yeah.
If we've got a candle, okay. Let me just change the color of it so that we can. Whoops. Let me just make it thick like that. Okay. If we've got a candle, okay. Some guys will have this idea that what we have to do is we have to take our measurement from the close of the candle, okay? And my interpretation of it is that we need to take our measurement from where price has been rather than the close, because close is just an instant in time, okay? So when we do get a double bottom of some sort, okay, so if let's say that that's their close, this is a down candle, right? And that's the close in there. If you've got a couple of closes that are kind of similar, we don't want to be taking the close. We want to take it where price has been, okay? Because the close is simply just an instant in time, a very specific instant in time, okay? And that's not really what we're trying to look for. We're looking for more where the rejection has started, okay? So if we've got selling into that zone, into the zone, and then buying back, it means that there's buyers present in this area.
Yeah.
Okay? So therefore, if there's buyers present, especially then if this is like a big wick, right? It means there's lots of buyers present.
Yeah.
Okay? And therefore it's a rejection. Okay? So just don't think about bodies are not necessarily unless a body looked like that, right, as a down candle, okay, that means that we're sellers only in this, okay?
Yeah.
There was no rejection over that period of time, yep. But if we do get the wick up here, it means there was sellers and then all the buyers came back in, or the sellers were buying back their positions, meaning they were taking profit. Okay, so that means that what that would mean is that there's no more sellers, wanting to be down below it. Yeah. However, if it was full body candle, meaning an engulfing candle of some sort, that would suggest to you that then there was only sellers and there's no buyers.
Yeah.
Correct? Okay. All right, get that into your heads. Okay. Now let's talk about double tops. Let's do it as a double bottom, okay? Comes down, and then we have to have, I call it reasonably equal bottoms, okay? And my interpretation of that would be, if I take a Fibonacci from this leg to there, anything below the 886,
Yeah.
or 882, okay? So there's a 786 there. Anything below really close, it needs to be close. It needs to be reasonably close to the bottom, okay? If it's like that, no, that's divergence, okay? If it's like that, no, we're creating a higher low. Yep. Can mean the same thing, divergence, high, low, all those sorts of things, but I don't call it a double bottom. Call it what it is,
Yeah.
right? Don't make shit up,
Yeah.
okay? And therefore, then off we go, okay? Double bottom, close. It needs to be reasonably close. If it's not close, then it's something else. There's a higher low in that case. And therefore, we could maybe be making a Gartley or a butterfly of some sort out of that, okay? Or if it goes deeper, that's divergence, okay? But there's no reversal at all until we start breaking the highs. Yep. We have to make sure we always think about where our fractal highs and fractal lows are. Okay. Everybody forgets this bit, okay? It's very simple. It's the most basic part about trading. Higher highs, higher lows. Okay, simple.
Yeah,
Okay.
trend is down.
Trend is down. There's support turns into resistance. Support turns into resistance all the way down until we get a reversal pattern. Would it be divergence? There we go. We've got a ending diagonal in here coming in. And until that last fractal is broken, the trend stays intact. Don't be reversing it at all until this gets broken.
Yeah.
Okay? And this is where Lorentz, this is a good segue into Lorentz, right? Because Lorentz will help you not come in too early. Okay? We've got to get, like, everybody's still thinking short, right? And it will stay short, and it takes, everybody wants to come in way too early, especially, and it's human psychology that they're FOMOing, right? But they think they can pick the bottom. Okay? You cannot pick a bottom or a top, whichever way. In this case, we're talking about a downtrend. Yep. Don't think you can pick the bottom, right? Don't stand in front of the freight train. Yep. Always go with it until you get a clear breaking of the fractal. Okay? Fractal. And then only then, we buy the pullback. Okay? And let's go into Lorentz now. Okay? Lorentz regression tool. Okay? And this is an excellent tool. It's very good. I love it, especially for the DAX on a 5-minute chart. It works really, really well. Okay? During a session, lately, look at this. Fuck, look at this, man. That's from all day. It just went, look at this. 3 o'clock.
Even all that.
All of this is just sideways. Okay, so we're just in a sideways period at the moment. We're in a squeeze in here, right? I put this up the other day on Discord. This squeeze in here, it's just, it happens. Okay, I haven't traded for the last 2 days.
Yeah.
Because I know I know that we're in a squeeze, and I'm just can't be bothered with it, right?
Yeah.
So I'm patient. I'll just wait for something to happen. And it's not just the DAX; it's everything. Everything else is doing the same sort of thing. Gold's doing squeeze, everything. Okay.
Except the Nasdaq, it just goes up.
Oh,
straight up.
yeah. Did you watch it? Is it?
Yeah.
Because I haven't seen it.
All-time highs. I think it broke 18,000 in Q1.
Okay, right. Tech stocks, mate.
Yeah.
Fucking AI,
Yeah.
Nvidia. Anyway, all right. So when we do get movement on it, okay, it's not a bad play. Okay. Lorentz should never be used alone. It should always be used in conjunction with your other knowledge and experience. Okay. So if we are in a sideways pattern, then we know not to do anything about it. We got to know when our the open of the market is as well. Okay. Obviously here we're coming to the open of the US session.
Mm-hmm.
Yep. So definitely don't use it, blindly. Okay. We still need to do our analysis on the other side, all over the place. Okay. But as soon as we make a break, and we change the color, sell the pullback, and then hold on to it until it changes color back. It can't be any more simple than that. Yeah. But you'll get probably close to, what's your win-loss ratio over the last?
Over the last little bit, it's been the last 40 trades about 65%.
65. That's pretty
Yeah.
good, man. I'd be happy with 50%.
Yeah.
Okay, as long as but you're going 1:1, right?
Yeah.
Okay. What hasn't made you hold on to them?
Well, I have been trying to go for those smaller targets to see if I can get the win-loss, but I probably still need to work on the psychological.
You think that you want to just try? You just want to get out?
Yeah, but I'm going for the smaller targets because I'm trying to see if I can trade with smaller targets and a higher win-loss. If you know what I mean.
Okay. All right.
Because if I'm going for 1:1 and I win 65% of wins and then half of the losses are reduced.
Yep. Well, then your system R multiple will
then
go
your
move
system
up.
R is better than anyway. Yeah.
Well, so then therefore, what's if you've got a 65 win loss over the last 40 trades? What's your system R?
Haven't done the maths yet. Yeah, it's
Come on, bro.
yeah.
All right, this is what I'm talking. Everybody should take note of this, right? You need to know these figures, right? Because it won't
Gives you
only
more confidence.
it give you heaps of confidence, right? If you are reducing if you're coming in as 1:1, great. But if you're then reducing risk, and you're getting that it turns around on you and getting a reduced risk, then that changes the ball game big time, right? So system R is very important. This is what the whole game is about.
System
right?
R.
System R, man. Yep. Let the winners run and reduce your risk. Yep.
I mean, last night, because I went,
Use the mouse, mate, so
Yeah.
everyone can see.
there was a flaw in this sort of zone, which before we start saying the Lorentz is shit because it just went straight through it,
Yeah.
there was a flaw here. And
And
then
we
when-
got 900. You got the 80 mark.
yeah,
as
you
well.
got, exactly, yeah. So,
So where's the other flaw? You're talking about here, the SR.
yeah,
in
all
there.
this SR3
Yeah,
at
okay.
900
Yep.
and the 80 level as well that we
Yeah.
always talk about.
And this is the thing about Lorentz is that you can't forget about
Everything
where
else.
SR or your channels
Yeah.
or whatever it is. It's an assistance tool, right? You can't rely on it on its own.
And when we got this wick, that candle right there, I went long.
Yep. So you went long in there.
Yeah, I went long there because I was confident in the floor, and I saw that wick as a reversal.
Rejection. Yep.
And then my thinking was after this candle here,
Yep.
I probably should just set the TP at VWAP and go to bed.
Yeah.
And then I took it off here for like 25 points, but I left 25 on the table, and I was right. Like, it was pretty obvious that this bullishness, and again here that's probably only the 382. I'm guessing. I can tell.
Yes.
Yeah.
Yep.
But with that bullishness off such a strong level, it's at least, because we know the VWAP's kind of like a magnet too.
Correct.
So
If you're outside the VWAP, it'll be a
Good.
mean reversion.
yeah, it's a good target.
It's a
to have.
reversion.
Yeah.
VWAP's always a good target. Yes.
And I probably just, didn't want to lose that open profit going into the weekend. I'm not going to sit here and lie to you.
No, that's good. That's
I've got
actually a
to
very
start
good
facing
point.
it.
It's a good
Yeah.
point that you don't, human psychology. He's
And
what
I
he's
had a
done.
loss
He's
earlier. Can I say something?
yeah. Go.
I had a loss earlier in the day, and that trade had put me ahead of the loss.
Yeah.
10 points or whatever.
You don't want to give
But-
it back.
Yeah, but really, if I not knew, but like how much more certain can you be that bullish action is at least going into the VWAP
Yeah.
off the floor.
Yeah.
Like,
Especially
that's
when
that
we're going all
candidate.
sideways.
Especially, that's why I also had confidence to take this, even though it was a freight train, because it was all that squeeze that you're talking about.
Yeah. So he's talking about this floor.
Yeah,
and
that
there,
whole sort of floor. Yeah.
that floor there. Yeah. Okay. Well, that's the thing. I mean, let me just prerequisite or
And that was one
just
thing I wanted to talk about.
say something about taking 25 points. There's nothing wrong with taking 25
Yeah.
points. That's good.
Yeah.
Okay.
But maybe
Depends on what size you're using as well.
Yeah.
Yeah. If you're using when I'm placing trades, it ends up being close to 60 lots at a time
Yeah.
per trade. So 30 points is a lot,
Yeah. It's
right?
like $2,000
A
US.
couple of grand.
Yeah.
So yeah, and that's kind of all I do is I just take those little scalps.
Mm.
Yep. You've seen me even go for 10 points,
Yeah.
right? So there's nothing wrong with that. I mean, if you take Nick for example, his target for the week is 300-400 points, which is fantastic, right?
Yeah.
If he gets that, that's great. Mine's, for me, if I get 50 to 100 points in a week, that's good for me,
It's pretty good.
right? So what we've all got to do is decide on what type of trader you want to be
Yeah.
that fits your personality, okay? I'm not one of those guys that wants to hold on to try and hold on for these huge swings, right? But if you are, then great, then
Yeah.
work with it. Yeah.
The thing is, and if you are that guy in this period, like in the last
Do this
3
so that
weeks,
people can see.
in the last, yes, yeah, from around, even if realistically the start from Jan 24 until now, it's sort of mainly
Hasn't moved.
sideways. Yeah. So if you are looking for runs, you're not going to get them, and that's where Tommy Boy's just been getting eaten alive.
Correct.
And he hasn't adapted. Like,
Correct. That's a very good point.
once it's here, you wake up and it's especially after this bounce here, that it's inside this. There's your range. You can see
Yeah.
that high in there.
Correct.
So don't go looking for the runner. Just literally where he does that.
Well, there's a problem is,
Yeah.
right? The problem is this. If we take the 4-hour chart, we've had our run. The run has happened.
Yeah.
This has already happened. If you put all of this effort in all the way up, right, in the end of last year, yeah, it's not doesn't just wipe it straight off
Yeah.
unless there's turmoil
Yeah.
in the market.
Which is
Okay.
awful.
Now we're just what you said was right in that you got to adapt really quickly to what the condition is at the time, right? So we know that we're in a squeeze. We know that we're in a range bound kind of channels type of thing at the moment. So play that, right?
That's one.
Until it breaks out, obviously. And Tommy Boy has not adapted to that
Yeah.
because he's blindly
And
just
it's getting even
and he's getting chewed.
day by day. Death by
'Cause I
death.
haven't been following.
Yeah.
What's it look like at the moment?
I can't say overall, but like the last 2 weeks has been a lot of days where he just, he gives that spill about coming back from the losses because he's just been getting
Yeah.
burned.
Okay. You're right. Okay.
But the thing I want to add to that as well is, at the moment I'm doing a bit more of like that last trade that I did and not taking just VWAP as much because I know this is going on. But when this breaks, if I keep doing that, like if I kept trying to find resistance,
Yeah, you'd be
yeah, so you have to adapt. You have to be quick to adapt.
correct. And if you are, when this type of this huge run happens for anybody, right? If you're trying to counter trade that, and you're not seeing it for what it actually is,
Yeah.
right? You're gonna get murdered,
Yeah.
right?
And also you can see size of candles. Like, look at that candle there.
This one,
That big candle, that's a sign that, hey, this is going to start running.
yeah. Yep. All right. Well, this has got to break at some point.
Yeah.
Okay.
Well, yeah.
But you can see how the fractals are working, right? So this has moved up, pulled back. It's like it's self-similarity on all levels, okay? So if we go all the way back, okay, there's your bigger run here, right?
Yeah.
Pull back, run, yep, but on a smaller level, okay? So this is a distribution phase, yep, on Wyckoff,
Yeah.
okay? I'm assuming everyone's done the Wyckoff section in the training, okay? So this is just the upthrust, yep.
Yeah.
Do you think it's going to go to 18,000? I can guarantee it will get to 18,000, right? Because the
Index always goes up.
well, all indexes will naturally go up, right? By default. Okay, why? Why is that?
Because they add to winners. That's one reason.
Well, everybody's buying,
Buying,
okay, and the mums and dads out there buying for dividends.
Yeah.
Yep.
And they get rebalanced every quarter with their...
Well, it's the
Price.
thing.
Yeah.
Soon as some stock doesn't perform in an index, it gets dropped off,
Yeah.
and then we put a new one in that's performing. So it has to go up.
Which is kind of like what we try and do as traders by letting our winners run.
Correct.
Because they're letting their winners
Correct.
run. And adding to it too,
So-
because the bigger the stock, the more...
So therefore, stop trading right now. Stop this bullshit dream that you're on, right? And just buy the S&P 500 and forget about it, right? You can.
Yeah.
You can do that. Do an ETF on the S&P 500.
Yeah.
Walk away for 50 years, and it'll be
Yeah.
huge.
The market doubles every 7 to 10 years.
Correct. Right. Same with property prices. All right, Grogs, have you got anything to say, mate?
Except property is a lot more work. And a lot more
I
paperwork.
drew up the Wyckoff in the chat.
Sorry, you threw it up.
Yeah. So I've been following Wyckoff 24 hour and that.
Yep. Yeah, let me put it up here.
Because everything's a three-way move, so it is distribution. I think at the moment.
Yeah, so there's the up thrust. Oh, so okay, so this is DAX futures, right? Look at that. He got the higher one on our CFDs. We never got that. See that?
Yeah.
That never
Yeah,
that
never
never came up
popped.
the top, but on futures it did. Okay, can everybody see that? Everybody in the room. So this is a distribution phase. So how long will it? I mean, this is only just starting to curve over this MA, right? This will take all the way over here, but if it is a distribution phase, hang on, let me just measure this. Just wait, hold on. I can't see it coming back down into his. I don't.
Yeah,
it's
it's
definitely not
probably
going to do that. But if anything, right? You know, back into 16,000, 16.5. Okay, 16. Yeah, 16K will probably be a pullback, but we need some fundamentals to support it. Okay?
It
won't
around
do it.
unless there's some bad news.
Trump gets into office.
Yeah, and then it'll hit 16 and go to like 25.
Right. But yeah, and it's a distribution because there's no more buys really up above 17. 17 is the high point, and I'm talking about DE30. It would probably be different on. Oh, it's pretty similar on everything else though, right? But it will take a while for this needs to come at least pull back into 16.3, 16, then move again to the upside. Yeah. All right. Okay, so for all the new guys that are in the room, and you might be getting overwhelmed with the conversation that we're having because between Grogs, me, and Pete, we're fairly experienced traders, and we're just rattling off all of this terminology. We all know what each other's talking about, like Wyckoff distribution, up thrust, all those sorts of things. It's all in the course. It's all there. Don't get overwhelmed and don't get disillusioned by it. It just takes time.
Yeah.
How long did it take you, Pete, to actually start?
I feel like I'm seeing it.
Okay, so when the Matrix, how Neo at the end starts seeing everything. How long did it take you to start, just getting onto that same page?
Well, getting onto the same page a few months on a surface level, but I feel like only maybe the last month is where I feel like I've able to sort of put more things, analyze that convergence thing, because I had that thing where I was maybe took way too much off the charts, and I had a chat with Grogs about that, and he was saying, yes, simple charts are good, but you're also missing a lot of information.
Correct.
And I think the last month is when I've maybe starting to piece all that whole convergence thing together,
But
whereas like I give this as an example.
Yep, use the mouse, mate.
Yes, this is a freight train, and maybe 6 months ago I would have taken this trade and a blue straight through it, and then you would have been like, it's a freight train. And then the next time I would have seen it and just been like, oh, freight train, don't take it.
Yeah.
But there's always like 5-10 different factors, and I waited for some confirmation, which was that wick.
Yep.
But there was the SR that handle, and there was all this going on, and that is why that trade worked. Mm-hmm. If we had SR and we're just hammering down like this is to the upside in reverse, then that's just it's not going to work.
Correct.
If this was the point where it did break out through then run, so be it. But it probably wasn't going to be, especially because US indices were not.
Well, the thing is, I mean, just from from a standpoint where you could just see it, right?
Yeah.
it's not going to bust all the way straight down
Yeah.
because this is the momentum of this thing is still up,
Yeah.
right? And I guess that's the thing, you know, don't have your blinkers on and just look at that,
Yeah.
right? Because in the past you would have shorted that there,
Yeah.
right? But now you see that this whole thing is still up. You've got the SR in there,
Yeah.
right?
Yeah, I would have gone FT50 to the
Correct.
downside.
Now, for everybody who, if you did see that, okay, back on the Lorenz story, okay, you know that you've got your SR in here, okay. We know that we're in an upward, you know, momentum is very strong to the upside,
Yeah.
okay. There's no sellers real below 900, okay. Look at it for the last few days. There's no real sellers
Yeah,
all week.
But
Even
so
last
many
the
times off 900.
Bounced it, right?
And even
Okay.
17.
Your trade can simply be, we pop through, there's a bullish candle there, pop through, take the long just on the retest, and you've got yourself 22 points, 20 points. That's all you need.
Yeah.
Do that with 60 lots,
Yeah.
you've just paid for your day.
Yeah.
That's more than most people will earn in a week,
Yeah.
right? Okay. And that's all you needed.
Yeah.
Okay. One of those a week on 60 lots.
Yeah.
Not
it's
many
not
people
bad.
can
Yeah.
trade with 60 lots, right?
Yeah.
Obviously, okay. But it doesn't have to be. You don't have to go for the massive moves, and this is what I don't do that. I don't go for those 100-point moves or whatever it is, or 50-point moves. So, you know, it'd be great to have it, but you know, it's okay to go get 10 or 20 points,
Yeah.
right? Okay. All right. Any questions from anybody? We're kind of just jumping all over the place, aren't we?
Yeah.
Guy?
I think
Yep.
the other thing to take into account, particularly with such a long trend leading into this consolidation period,
Yeah.
is the time factor. I mean,
Yep.
the rally itself lasted for 2 months, so the distribution is going to last a month, 2 months.
Correct.
And recognizing the time stamp of each pattern
Yep.
relative to the momentum or the market structure.
Yep. Yep. That's a good segue into my next thing that I'm going to talk about. Okay? Cycles. As Grogs just said, this thing moved up from November 1st of November to the 14th of December. It was a
Yeah. Just went up.
month and a half, right? It's not just gonna wipe it all straight back off,
Yeah.
right? You've got to have some serious fundamentals going on to warrant a huge move of any type, right?
Yeah.
There's nothing really happening at the moment. Okay, this was all the Israel war. This is the start of the war in Israel and Palestine, right? But let's talk about cycles, okay? And we've spoken about this before, Pete, but I'll just do it as a topic, right?
Yeah.
If we get our Fibonacci time, okay, so there's a theory out there called cycles theory. I use the Fibonacci time, but I set them all to 1 is 1, okay? 1, 2, 3, okay? If the idea of that is that if we take a low, where am I? We take this low in here and we go to the next low there, right? The next low, fractal low, will be there, and the next one will be there.
Yeah.
Okay, so really 1 is to 1. If you take your fractal low, it doesn't always work. It's not perfect, right? But it's good to know that as far as your timing goes, okay, it takes time for it to turn over, and then it hits its new fractal low,
Yeah,
okay, and then moves up, and then it takes time, and then it hits its new fractal low, right? So just have a play with that, okay, as far as cycle theories go. I'll bring it up every now and then. Sometimes I use it if I'm getting antsy-pantsy, right? I want to go, fucking, this thing's not moving, right?
Yeah.
Or, you know, I want to get out. You know, that, you know, you're starting to get jittery that you want to exit the trade, or you want to, you know, exit it because it's taking too long, or you find yourself, you know, having anxiety, or, you know, you're impatient with it. Do your cycle, or just play with the cycle thing, and that kind of helps you hold on to it for a little bit longer, right? Until the actual cycle completes. Okay. Okay. Let's just have a go at this over here. I don't really think. I mean, if we take that low and we go to that low, you can kind of see on here that there's the next low. There's kind of the next low. Can you guys all see that?
Yeah.
Hang on, let me bring that up. Even on the bigger time scale, right? So there was the low in there. Did I do it right? There, and then this one here. Okay, so that one there, and then this was the low, and then this was kind of a low, right? Right. So it kind of works.
Yeah.
I'm not going to sit there and, you know, preach that it's the be all and end all, right? But, you know, it's good to have that in your arsenal, right? Have that idea. Okay. Any questions?
Yeah, everything that we do is an art. It's not science.
Correct.
So you're trying to improve the probability. So having all of these tools in your arsenal helps you build a case to take a trade. You don't ever take a trade just off one signal. You're looking for convergence points. You're looking for reason. Take it short or long. Just one reason. And recognizing that nothing's foolproof.
Yeah.
Correct. And then once you have formed the idea of like a convergence idea with you know, multiple you know, strategies or signals, right? And then it simply comes down to risk to reward, right? Cover your stop, or bring your stop in, which is what you've been doing.
Yeah.
And let you win a run. Not to break even, but you've got to give it room, right? Got to remember. I guess this was a problem of yours as well.
Yeah.
Is that, you know, you brought your stop in too quickly, or you may have had it too tight to start with, right? Because you were trying to get so specific for the reason that you didn't want to lose, right? Would I be right?
Yeah.
Fear of losing, or you just did not want to give money away, right? In this game, you've got to be able to give money away. You've got to donate, right, to get the win. Okay, so you've got to have a stop wide enough to let the thing sort itself out, right? And you've got to, once it has moved in your direction, then you move your stop, but not too aggressively, right? That's another art, Grogs, right? How quickly do you move your stop? How much room do you give it before you start moving it? Okay, because you'll never ever go.
The starting point is always the fractal.
Correct.
If we create new fractal highs or new fractal lows, that's the confirmation of the trade maybe going in your favor. Then you pull it down to the last fractal.
Yeah.
I mean, if you shoot it in straight to break even, you're not giving it room for its pullback, it may knock you out and then take you in the direction that you want it.
Correct. Because how many people have seen where your entry point is?
2.
One. You. Okay. Okay. How many people know where the fractal high or low is? Everyone.
Yeah.
So you're right, Grogs. You've got to put it at the fractal, or just outside of the fractal, and then let it do its thing, right? Because if it's going to break that fractal, high or low, then you're wrong. You're just wrong, right? Let's talk about that, actually. Let's think about this, okay? When is it a good time to re-enter a trade when you know that if you get stopped out because it has penetrated the fractal and it is looking like it's going to turn again, right? Do you get back in? Or do you forget about it? Got to get a box of tissues and start crying, right? You know, it's okay.
You're really good at that.
I'm very good at re-entering because I got it wrong, but I got it wrong on timing rather than the direction.
And getting the convergence points wrong. You still pick the areas right.
Correct.
Yeah.
Yeah. Comment?
You got to make sure the second entry isn't emotional.
Correct.
That the rationale for the second entry is solid. It fits the system.
Correct. Because there's a difference between re-entering a trade based on revenge trading and being emotional about it because you thought to yourself, fuck, I don't want to lose, I've got to make my money back. That's the wrong decision, right? But if all of your convergence points are still there, you've just got the timing wrong, right? Or you might have come in, let's say you've come in here short, and you got stopped out, and then you come in again, over here.
Yeah, because you've seen the wick.
Because you've seen the wick, and that's valid, right? You might have just got your timing a little bit wrong, right? And this is where Lorentz will help as well, a lot. It will really help with timing, yeah? And I guess this cycles theory will help with timing as well. Okay. Cycle theory. All right. I'm going to have a 2-minute break, guys, and then I'll come back, okay? Where's Discord? All right, we're all still here. Good, thank you. Pete's walking around my office at the moment looking at all my books.
Yeah.
And I've just asked him which one's your favourite. I guess some of you have never seen my office, but it's... How many books do you reckon are here?
50 to 100? There'd be at least 50, I reckon.
I think last count was about 60-something.
Yeah.
Anyway, so which one's your favourite? Grogs, which one's your favourite book? Which one would you recommend, Grogs, for any of these new guys that are in the room? Which one you recommend that they read first?
Trading in the Zone.
Trading in the Zone by Douglas. Here it is. There we go. Trading in the Zone by Mark Douglas. He's got a second one as well, Disciplined Trader. I think, no, hang on. Disciplined Trader was his first one, wasn't it?
Yeah.
That was his first one, and then then he did a second one, right? So yeah, you can see I've smashed the shit out of that one, right? But yeah, definitely. Okay, my one that I recommend for anybody, as far as psychology goes, is The Mental Game of Trading.
That is good, yeah.
That's really good, okay? Jared Tendler, because he came from, and this Grogs, I don't know whether he read it or not, but he came from the school of poker playing as well. Yeah. How to be...
I've read it.
You've read it?
Yeah, I've got it as well.
Mental Game of Trading by Jared Tendler. Hang on, let me put it up on this camera. No, you guys can't see this, but that is definitely I reckon that's probably one of the best psychology ones that I've read. What about technical? What's your best technical one, you reckon?
Sure.
I've read a bunch of them.
Hang on, the Lepers Proprietary Trading course.
Yeah,
yeah. Well, I was about to say that too.
Because most of the books
I reckon Trade What You See is pretty good for me. That was probably one of the first books that I read, and God, my mind was just blowing when I read that. But yeah, Fibonacci Queen.
The books kind of talk about one strategy though.
I know, but this is the thing. This is why the course that I've put together here is a combination of all of it together, right?
Yeah.
It's a convergence, right? So anyway, all right.
They're all sort of got their own, like the Steve Nissen book is...
Well, they've got their own pitch, right?
Yeah.
But I think if you put them all together, then you've got
a system.
you've got an idea of what's going on, right? All right, let's talk about the news strategy. I don't think we're going to go for 2 hours. I think we'll probably be done.
Covered a lot. That was intense.
Like a camping trip.
Yeah.
Intense. We will probably go for another half an hour, I guess. But we had NFP last week. And NFP was a great, perfect trading opportunity. And this, I'm assuming everybody's done the news strategy, so I don't need to talk about it too much, right? But we were 3 standard deviations outside the 3rd standard deviation envelope. It was huge, wasn't it? So that's why it moves the impact. Oh, sorry, that's why the price moves so much. Yeah. So where am I? Let's go to Euro USD. 5 minute. Yeah, there it is. There's the NFP there, right? And I don't know whether you guys remember me saying this. I said that, this is such a huge move that this will go to 107, right? And it almost got there in the end, didn't it? But look at the candle on that, right? Okay, so if I do that properly, let's get really specific on it. It actually went to the 618, pretty much to the tick. Look at it. Yeah. Right. But anyway, so we had the differential between the consensus and actual was beyond 3rd standard deviation of the mean over the last 6 releases. Yeah. If anybody doesn't have this, I'll repost this up. Okay, so this is the calculation form. We can redo it, but sorry, I'll put it up so you can use this one, because the one that I've got in the course, this one's actually a little bit better, because I think Muppet Jeff redid it for us, which is great. I'll repost this for everybody when we go offline. But what do we do though, right? There's probably more opportunities than any, okay? If what we're trying to look for is a differential between the consensus and the actual, okay? So there's the consensus, the actual comes out. If it's above the envelope or below the higher standard deviation envelope by a significant amount, then great. There's something wrong with the word on the street wasn't matched with what the actual numbers were, right? So therefore it needs to refactor the price, right? Because leading up to a release, you get price factoring. Okay, so it actually everybody's getting word on the street. So we think that interest rates are going to go up, so let's factor that price into the market. Okay, and then when they're wrong, they've got to recorrect it, right? And that's what's happened here. Okay, there was factoring. This is all factoring into the NFP, okay, and then they got it wrong. Bam, they've got to correct it, okay. So therefore, that's why and this is the good trade for us, okay. But what happened now this rarely happens. Great trade. You'll be waiting maybe once or twice a year. This type of thing will happen unless Trump's in office, right?
Yeah. Which may happen soon.
Let's hope so, man. Yeah. Right? But, you don't want to be waiting all year. I mean, the new strategy is just another strategy that we put in our arsenal. Yeah. Okay, great to trade it. We got to put it along with all of our day trading and our swing trading, etc. Right? But if that's only going to do something like this once or twice a year, it's pretty shit, right? Yeah. Okay, you're going to be sitting on your hands waiting the whole time, waiting for this type of thing to happen. Most of the time, they do get it right. Okay, it's inside the 0.5 standard deviation envelope, right? And I've thought to myself, and it's only been recent that I've really come across this, is what do we do when that happens? Okay, and typically what will happen on a 0.5 standard deviation envelope, you'll get a 5-minute candle will come down, and they'll create a humongous wick like this. Okay, create a huge wick in there. Yep. So if it's got the huge wick, because what happens when the news actually comes out, we get the robots scanning the statement. Okay, scanning the number or the statement that accompanies it. Okay, and you can see they scan it, they pick up keywords. Okay, and then they pop it off based on the numbers and the keywords that are in the statement. Okay, and they'll do that. It'll just pop off. But if there's no more sellers, let's say this is a down candle for argument's sake. If you do get a down candle like that, and then you get the huge wick, and we've discussed this right at the start of this session, what's going on? I'm asking you. Go. What's going on?
It's reversing.
It's reversing. But what's happened as far as sellers and buyers going down in here?
As in,
There's lots of buyers there.
There's heaps of buyers. There's guys. The robots have popped off. Let's say the candle opens here,
Yeah.
right? Sell, bam, like that.
yeah,
And then there's no more sellers left.
yeah. So
And it
they're all
struggles.
covered.
You can see the thing. It struggles,
Yeah.
right? And then it comes back up. By the end of the 5-minute candle, it comes back up into here.
Yeah, they've
Right?
brought their positions back.
There's no more. They're taking the profit out,
Yeah,
or they're covering themselves,
Yeah.
right? And then there's buyers in there.
yeah,
Typically, there won't be any actual physical buyers.
Yeah.
Maybe there will be, but it's most likely going to
Sellers.
be the sellers exiting their positions
yeah.
because they're not confident with this thing continuing, because they've actually looked at it and gone,
Yeah.
well, it's inside the 0.5 standard deviation.
Probably
It's not that bad. We don't
Yeah.
need to factor.
yeah,
Okay, so therefore, what we can do, if it is pretty much on the mark, right, we can, at the close of the candle, we can start buying,
yeah.
right, and this thing will just go like this. Yep.
Yeah,
Okay, there's plenty of times that we've all seen that happen,
yeah,
right? So there's two ways to play. Sorry. There's two ways to play the news strategy. One is if it's outside of the third or 1.5 or 2 standard deviations, go with it,
yeah,
and that will typically close as a huge
yeah,
engulfing candle. Okay, but if it's inside and it creates a massive wick for us, buy it straight away. Okay, and you'll at least get it creeping back up.
yeah.
Now, in saying that, there is it's never 100% correct,
I've
right?
seen that happen, and then it dribbles down.
Yeah, and there's plenty of times when I've seen this go like that, and then it decides to keep moving down.
Yeah.
Okay, all right. The other thing that we need to take note of with the news strategy as well, is there an overall larger momentum trend happening at that point in time as well?
Mm-hmm.
So if there is a larger, let's say that there is a larger momentum trend to the upside, okay, and this happens, right? And this happens, okay, then you've got to be careful that that's just not just a temporary pullback,
Mm.
and then the buying is going to start happening, okay? So then it starts doing that, okay, to continue the overall trend.
Yeah,
Because if we've got, like, let's say that it's Oz US, okay, and then Aussie numbers have come out, and we've got a dump like this, okay, but the overall weakness is in the stronger currency, which is the US dollar, the Aussie dollar will continue to the upside. Okay, does everybody understand what I'm saying there? Do you get what I'm saying?
do you say it one more time?
Okay, right, because that's confusing.
It's confusing, yeah. I do
Yeah,
get it,
because I was doing the counter currencies. So
Yeah.
Aussie US. If the US dollar is weak, right, the Aussie will move
yeah,
up,
Yeah, of course.
right?
Yeah,
Okay,
yeah,
base and current
Yeah,
counter.
yeah.
Yeah. All right. That will probably be very confusing if you don't know the base and the
Understanding how
counter. Yeah, well, that's exactly right. You've got to think in which side is the US dollar on. Okay, is it on the leading, or is it on the counter side, or is it on the base side? Right. Okay. And if you don't know what I mean by any of that, you've got to go back and do the course.
Yeah.
Okay. All right. Grogs, do you understand what I was talking about there, mate?
Yeah, mate.
Okay. All right. So, what I would like everybody to do, right? There's a lot of information that I've just spoken about right now, okay? And it's can be a little bit overwhelming if you're brand new to this, okay? Take what you can out of it. Don't get disillusioned, right? Because the three of us we're highly experienced in what we're talking about. But you don't have to do everything at once, okay? You don't have to be at my level where I can talk about, I can trade everything at the same time and think about it all at the same time. Focus on one thing. You've got to know all the strategies first, right? But if you're going to be a day trader, let's just stick to day trading for now.
Yeah.
If you're going to be a news trader, let's do it. But let's do it when you're ready for that.
Yeah.
Okay. Don't think that you can juggle all of it at the same time, all right? Or you're just going to get overwhelmed and confused, okay? All right? Okay, have I covered everything? Any questions from anybody? ABCD cycle theory, ABC. I'll do ABCDE count. Sorry, I've forgotten to do that.
Yeah,
Let me
that's what I was about to say.
Okay, let me just try and find something. Going back to basics. Sorry, go ahead.
Yeah, I just want to ask about the Excel for standard deviation. You were saying like you attach onto the training sites, and can we download all those sites?
The Excel spreadsheet.
Yeah.
Yeah, I'll put that up. I'll put that up in general later.
Sure.
Is that what?
And also when we are doing the course, when you go to the document, you download the documents from line. There's no actually when you look at the document, there's no actually any. It says standard deviation. There's no other direction. Just tell you like do this to work out onto this.
Okay.
There's no like a solution.
You'd have to show me specifically. You're talking about the news strategy document?
Yeah, the new strategies documents.
Okay.
It's just when you go through to revise all the document to read the paper form, the PDF
Yeah.
is not really details. It's so hard to. There's no solution saying like put this will work out to one standard deviation.
Okay, so let's talk about that for a second. I think I understand what you're asking me, mate.
Yeah.
Is he talking about the historical data not being in the Excel?
Is that what you're talking about, Sebit?
Because you got to put the historical data in yourself through TE.
Yeah, okay. So I'm just confused about what you're asking there, mate.
You know the formula to work out the standard deviation?
Yes.
Like, let's say the A expressions, the US core expressions, or the percentage of to work out all those solutions, you know the formula, concessions plus standard deviations. So when you go to the PDF, there's nothing like give you a solution. There's a new learner. So you need something to put onto Excel to work it out.
Correct. Yes, you need to.
The standard deviation. That's why I get confused like how to go into the Excels.
Okay, so let's do an example of it now. Okay, so let's do an example. Okay, so we go to our economic calendar. Okay. We find our release here, Canadian unemployment. This is perfect, okay? I select it. Here we go. It's Canadian employment. Yep. The consensus on Canadian employment, this has actually come out. So the consensus was 5.9. Yep. 5.9.
Yep.
Click in here. Then I take the last 6. But this one's the new one. Okay, what does that say, Pete? Can't read it.
I think it's 5.8.
Yeah, let's make it 5.8.
You can see the side.
5.8. The one previous, 5.8 again. One previous to that is 5.7. The one previous to that is 5.5. The one previous to that is 5.5. And the one previous to that was 5.5. So I've just gone 1, 2, 3, 4, 5. Okay? 6. Yep. Here's my average is 5.6. Standard deviation is 0.1. So it's really tight, isn't it? Okay? Okay? This is now I've done my envelopes. 0.5 standard deviation envelope, 1 standard deviation envelope, right? So basically, let me just take a photo of this. Basically what it's doing, let's draw it so we can see. I'll take that so I can draw on it, okay? Up here. Okay. So basically what it's doing is finding the mean, which is around about, what was it? 5.6 is the mean. There's the mean. Yep.
Yeah.
All it's done is an envelope above and below. Okay?
Range.
It's a range. Yep. If we get, so there's a 0.5. So let's go 1.5 standard deviation envelope is 5.7 and 6.1. So it's really tight, actually. So let's go back. 5.7, the envelope is 5.7, and whoops, 5.7. Oh, that's actually above, right? Oh, okay, 5.9 is the consensus. Sorry, I've just confused myself. So let's go here. Consensus is 5.9 up here. Okay, up there. Yep. The lower this 5.7 is the lower envelope, and the upper one is 6.1. If we get outside of this or below it, outside of it means we've got something wrong. Right, from the word on the street. Okay, Sebit, following me?
Yeah, I got it.
Okay.
Yeah.
Okay, but let's just consider this. Look at all these numbers. Okay, they're quite close. So if they're close, I'd probably want something really big to make it like a huge shock. So when they're really close like this, and we've got everything's like kind of tracking really tight in a tight band, right? You want it to be really shocking.
Yeah,
okay?
The range is small.
Correct. Now, if this was a different, let's say this was 7 and that was like 9 and that was, 4, right? Okay, which will never happen, right? Then this envelope here will become much bigger, won't it?
Yeah.
Okay, so therefore we might want to look at like a half or 1 standard deviation instead. Okay. All right. Does it make sense?
Yeah.
Have we answered your question?
Yeah, I got it now, yeah. So before it was a little bit confusing, now I just got it.
Okay,
Thank you.
excellent. No worries. Okay, everyone get that? Good. Do I need to keep talking about it? No? Okay. All right, anybody else with questions? Don't be scared. Oh, A, B, C, D, E. We'll talk about this and then that'll kind of be it. Okay, guys? Let's go up here. Let's try and find a really nice ending diagonal. Nice little...
There should be lots of them.
Head and shoulders. Look at that, boys. Head and shoulders. That's sexy, that one, isn't it? Head and shoulders. Bam. Look at that.
And the SR.
1618 and SR. You couldn't get it any better, could
Mortgage
you?
the house and buy it.
Mortgage the house. Mortgage your mum and dad's house.
Even
Right?
worse.
Right? Okay, let me just try and find something really beautiful.
And then they end up homeless, and you say,
Yeah,
"That
yeah.
was the 1 6
Yeah, it's 1618 and you're down on Elizabeth Street going. Oh, come on. 5-minute euro. Let's do half hour chart. Let's see what's going on here. Give me a sec, guys. I'm gonna try and find something really pretty. I don't know. Am I blind today? I mean, I can see them, but I just want something perfect.
Head and shoulders at the bottom.
Yep. Here, down here.
Yeah.
Okay, that's another point. Alex and I, the other day, were talking about this. Reversal patterns have to be at the end of the trend, right? Not in the middle. Okay, at
So
the
on the
end of the
SR.
trend. On the SR, usually they hit the SR, you can count 5 waves. Yep. Let me go to another market. This is not working for me. Okay, here we go. Let's do this. Hopefully this is pretty enough. Okay. Ending diagonal, what do you reckon? Yep. When we have at the end, what we're talking about with these ending diagonals, double tops, double bottoms, head and shoulders, they're all reversal patterns. They've got to be at the end of the trend. Okay. They can't be in the middle. They can't do anything like that. Okay. Secondly, if it doesn't look really good, then nobody else is looking at it. Therefore, you should not be looking at it. Don't curve fit, right? Curve fitting means confirmation bias, basically, right? Don't put what you want it to be into what it isn't.
Yeah.
Yep. Trade what you see, not what you think,
Yeah.
right? Okay. But important, this count, the count that I'm doing here, 0, A, B, C, D, E, break, right? This A, B, C, D, E will always is just simply there so that you don't come in too early. You get your timing right. Okay, let it do its distribution phase. Let it do it slowly, turn over, and then take the trade after E. Okay. Now, if we're at the beginning of this, you'll probably be looking at that and just going, okay, cool. Now we've made a new high, so then we create that. Okay. Okay. If it does pop up, if you get a candle that does this, right, up here and then pulls back like that, it's completely invalid. Forget about it.
Yeah.
It's not it, okay? Because we're taking our trend line to the end of the wick, right? Not to the bodies, okay? All right? Because that's where price has been. So therefore, if that does do that, something like that, then I'm readjusting this to up here,
Yeah.
okay? All right? Take it for what it is, all right?
One thing to add to using the wicks would also be if you're using the wicks, then people will be seeing the same pattern on different time frames.
Correct. Correct.
Whereas if you're using bodies, then it could only be seen on one time frame.
Correct.
And
That's right.
also, you know what's funny? 382 of you were drawing that up as a theoretical example at the start of today.
Was I?
Yeah,
Yes.
I'm pretty sure you were.
Well, it's the theory. If you've got
Yeah.
A, B, C, D, E,
Yeah.
sorry, 1, 2, 3, 4, 5 impulsive, you've got A, B, C corrective, right? Corrective will always come to the 382
Yeah.
if it's good.
Yeah.
Right?
Yeah.
Just make sure, and just comes back to the same thing. You got to know the theory.
Yeah.
You got to know the theory.
It's just
Right.
funny how you're talking about that exact example.
Yeah, and
popped up.
it's right there, right?
Yeah.
But there's okay. So there's triple divergence. I can even put the RSI on here, and I'm pretty sure that that's going to be divergence in there.
I'm pretty sure as well.
Okay. Look, I mean, it's not the right time frame, but it is. It's diverged.
Yeah.
Look at it, divergence in there.
Yeah.
Okay. All right. So A, B, C, D, E is the counting that we do when we're dealing with those classic TA patterns. Okay. Very important for all the new guys. Please learn your rules. Okay. Head and shoulders. Where is your target points usually? Okay. 1:1 from head to neckline. What are the rules that sit around the double bottom or double top? Okay. And how do we measure that? Okay. And I did that at the start. Okay. And that's a 1:1 or 1:1618. But like, I can't stress it enough is that, and don't panic, right? It takes time to learn all this. How long?
Probably still just, I
but
need another good year before I can.
Correct,
Yeah.
right? But I mean, the thing about Grogs and about Pete here is that, they were on top of me all the time, right? I think you came in like twice a week sometimes,
Yeah.
right? You were just pushing me,
Yeah.
right? And then you watch all the videos over and over and over again, right? It's
'Cause
trading.
If you watch an hour video, you might pick up. Your brain can't remember.
You can't remember
remembers
everything.
One or two things.
And I've said this to every most people is rewrite my book, rewrite the book, write your own book,
Yeah.
right? The way that I learned is that I wrote the course,
Yeah.
right? And the more you repeat it to yourself, the more you'll learn it, right? Okay.
I agree.
Yes, buddy.
Does the time different multis, or it just have to be in 1 hour slot?
1 hour. I think there's enough. We can do. There's enough in 1 hour. Then you can't possibly go longer than 1 hour and remember everything that we do. What it is about.
So we have to train in 1 hour's time, knowing like 30 minutes or 4 hours.
No, mate. You can trade in whatever time frame that you want, man. You can do. You make that decision for yourself. I mean, we're doing DAX 30 on the open of the Euro session. We're doing 1 minute and 5 minute charts, right?
Right, thank you.
Yep. And if you want to be a swing trader, half hour. Some guys do 15-minute charts. Okay. If we're doing new strategy, it'll be a 5-minute chart. That's part of the strategy. But yeah, you've got to make that decision for yourself, what type of trader that you want to be. Okay. I don't suggest you try and do everything at the same time. It's too much, right? But I think a lot of the guys will be coming into the room with me. And if you guys are not coming into our live trading sessions of an evening, you must do it, right? The more you absorb it, or be present, right, and surround yourself with it, the more you'll pick up. Okay, it's the old saying.
It's the most important because you're doing it in real time.
You're doing it in real time. You
And
see
that's
how
still doing it in real time.
you can see how my decision making can change.
Yeah.
Okay, but it's. I read it in a book somewhere. The first rule of becoming the Olympic 100-meter sprinter, right, is showing up.
Yeah.
You got to show up.
Yeah.
Do you think Usain Bolt was just a 100-meter runner and didn't do anything?
Yeah.
No, he was there at fucking 4 o'clock in the morning for years and years and years. But you don't see all of that,
Yeah.
right? It's not just going to happen to you,
Yeah.
right? It won't just. It'll only click if you are sitting right next to me. It's like, okay, here's another example. If you're an apprentice carpenter, what happens? What do? You get up at 4 o'clock in the morning, 5 in the morning, you go and stand next to the carpenter, and you watch him hammer nails and do all of the carpentry
Yeah.
for years.
Yeah.
Well, standing next to him,
Yeah.
right? If you guys don't stand next to me, you'll never get there.
Yeah.
Simple, right? Now, how long have you been doing this now, Pete? With me? 2 years?
A year.
Year and a bit,
Yeah.
right? And it's now clicking for you,
Yeah.
right? Grogs, how long have you been with me, mate?
4 years?
Yeah.
Way too long, mate.
Yeah, just over 4 years?
4 years,
Yeah, exactly,
right?
Exactly.
Yeah, too long. You can't stand me anymore. But 4 years. But now Grogs is an absolute machine. You're becoming a machine because you've been like hassling me for so long, right? If you guys, all of you guys, if you don't sit next to me every night of the week and come and do the one-on-ones with me, it's going to take you way too long. Okay, you'll just give up probably, right?
Yeah, like a lot of people.
But there's a lot of money to be made out of this. I mean, you could just see it, right?
20 points, 50 lots is a good.
Well, the thing is, I can make $2,000 in about 30 minutes
Yeah.
a day, right? What do I do for the rest of my day? I go down the pub and drink beer
Yeah.
while everybody else is going to work.
Yeah. Like losers.
Well, they're not losers.
No,
We don't want to say that. But, just saying that you can get there, it can be done, but you've got to show up. That's what I'm saying. And, get disciplined about it, right? It's not just a fairy fucking thing where it's just going to happen to you, right? All right? And we've got to get ourselves out of dreamland or Disneyland, right? It's hard work.
Yeah.
Okay, there's my little pep talk that I
Yeah.
promised everybody, right? All right. Any comments, questions, guys? No. Anyway, I'm just about to deploy 200 grand to Grogs as of next week. We raise capital, and me and Grogs are gonna trade it. Hopefully, double it in a year. Right, and that's conservative.
Yeah.
So we're doing it. We're here. We're making shit happen, right? And what I want out of everybody who's in this room, I want you to be up there along with Grogs, and Pete, and trade my capital, right? And make some money out of this. All right. That's the whole point of what we're trying to do here. Okay. All right. So hopefully I've inspired you. All right. Any questions, guys, before we get out of here? Did everybody?
There's no question, but thank you for your help. I'm all in.
Great.
No returning back. Yeah.
Okay, perfect. Guys, can I just ask everybody something? It just helps me out. Okay, if you can go to reviews here and leave me a review, if you are enjoying what you're doing, if you're learning something, for all of you guys. I mean, if you've already left a review, you don't have to do another one. But if you haven't done it, can you do it? Either there on reviews here,
Google.
or do Google reviews on Lepus. Okay, if you think you're getting a lot out of it, it just helps me. Okay, gives me a little bit of an ego boost as well, because I need it. All right, okay, guys, I'll leave it there. Love you all. I'll see you all soon, and I'll put this recording up when I render it. I'll put it up in the next few days. Okay. All right, guys. Thank you very much. I'll see you later.